Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have William Koppelmann on the line, and he is CEO over at SPFX, also known as Standard Premium Finance. And today's episode is part of our DealFlow Discovery event, where we bring you the best of those that are attending the DealFlow Conference over at the Borgata in Atlantic City, New Jersey. You can get tickets and learn more over at DealFlowDiscoveryConference.com. And William, I understand you're going to be there, so welcome first off.
Thank you very much, Adam. I appreciate it. I've seen your work. I'm very impressed. Congratulations on your success.
Very
we're looking
kind.
forward to it. As I mentioned, this is our first time, so Brian and I are really excited to attend.
Yeah, well, I want to get into that and more, but before we do, we're going to start this episode the way that we start them all, with what we like to call our Mission Matters Minute. So, William, at Mission Matters, our aim and our goal is to amplify stories for entrepreneurs, for executives, for experts. That's what we do. William, what mission matters to you?
Well, what mission matters to me is to provide customers or insurance policyholders, in our case, access to insurance coverage that they would normally not be able to have access to. And we do that through insurance premium finance, which is essentially just a payment plan for insurance policies. Yeah. So that gives people peace of mind to get policies that otherwise could not afford.
How'd you get into the insurance business? Where'd that start for you?
Well, interesting. You know, my father was in this many years ago.
Oh, legacy. Hold on. Your dad
Legacy.
was in...
Yeah. He's a New York guy. And back in, I don't want to date myself, but in the 50s, New York had what they call compulsory insurance. So it was mandatory insurance. Again, you know, especially with auto insurance, there's an existence of many uninsured drivers, especially in Florida and in New York. So New York came out with a compulsory insurance, and there was no way for a lot of these people to pay. So it was originally the American Four. It was four big insurance companies came out with a finance company, and they provided the means to pay these policies over time using the insurance premium as collateral in the loan. So that's how it started. I was actually a pilot for many years, and my father said, "Hey, do this," and I had no idea what he was doing. But I remember when I started the business, my father said, between my son and I, we have over 30 years in the premium finance business. He had 29 and a half, and I had 6 months, but it sounded good, you know?
Yeah, it does sound pretty good.
Yeah, and that was, 30-some years ago. So that was my legacy.
Yeah. Wow, what a great story. It must have been interesting growing up. Like, you're pretty young still at that time. So, like, growing up through the business and getting to work with your dad. Yeah. I'm just curious, what was that like? Like, take me back a little bit. It sounds
really cool. Yeah, really interesting. You know, my father was a road warrior. He was on the road all the time.
Had to be for that business, especially back then. There's no internet. We're not doing
crazy. No, and he used to take, we have all the means now, all these electronic things, and we have Google Maps. And he used to go to the AAA and get the maps and put pinpoints in these things. And he had a book with the papers and all that.
The Thompson guy, he probably had a Thompson guy that knew how to read it.
Yeah, you know it,
I know it. I did my little stint in insurance in Arizona once upon a time. I know, come on, road warriors.
Yeah, so he did that, and he took me out on the road. In fact, when I started, I was too young to drive the lease car, so I had to work in the office for about, you had to be 21 to get the lease car. So I was in the office. Learned the inner workings of the premium finance business back in the old days when, that was a bunch of elderly women smoking cigarettes in the office, it was hardcore boiler room stuff. But I paid my dues. I stayed in the office for about 6 months and then hit the road and worked the territory, mostly in Florida, down the southern coast, and developed what was an area of, had 100 active independent insurance agencies. Those are our customers, into, about 800 to 1,000 clients. And got recruited ultimately to another company. And then through a series of events, had to change over and did some things and was promoted up the line, to VP and then, executive VP and so on and so forth. So here we are 30 some years later.
Man, what a story.
Yeah. It's I was very fortunate. I had a lot of good mentors along the way, which is really important, that modeling kind of aspect. You take these good features of people, even not so good people always have some kind of redeeming quality, right?
Yeah. I got to work in a pay it forward question here, William, because you mentioned mentors, and for the next crop or group of individuals that are either graduating college or looking at careers and things like that, what has this industry meant to you?
Well, it's given me a great education. We have a lot of individual investors. So, as my partner had mentioned before, our collateral is our assets. The company,
Yeah.
essentially, the assets are just the unearned premiums that we finance. But we have a
Hmm.
lot of mom and pop investors. So I had mentorship from some elderly people that work for, public companies and
Hmm.
whatnot. So I understood the fundamentals of proper accounting, and those were having proper reserves and allowances. What we
Hmm.
do is we study what our losses are historically, and then at the time of the sale, we book those losses and we put them
Yeah.
into an allowance so that in the event of a loss, we charge against the allowance instead of writing it off and taking a loss. So it's provided me the base of accounting to be very conservative, to be able to protect our private investors. We have a lot of mom and pop
Mm-hmm.
investors that my original partner got started kind of with little promissory notes, and he took that and leveraged it against his bank. So
Yeah.
we have a duty. It's really kept me, fundamentally sound accounting wise to look out for the best interests of the little people, so to speak.
Mm-hmm.
And
Yeah.
then now, since we're a public company, in turn, our stakeholders, our shareholders.
Mm.
So it's really a conservative type of an accounting background that's really given me an immersion into this
Hmm.
business. Yeah. So.
Yeah. Yeah, I want to shift focus here slightly here because I know we can talk about standard premium finance in general all day long, but I want to get into a topic that I think, based on your obviously industry knowledge and also
Mhm.
how long you've been doing this, we hear a lot right now about the talk of expanding federal insurance programs to protect business and communities. Where do you want to start with that one? Like, what are you seeing?
Well, what we've seen, especially in Florida, there's an imbalance in terms of the payment structure, the premium structures.
Mm.
Companies look, they're in business to make money. We're in business to make money.
Yeah, of course.
Um, but the two main principles is, fundamentals of insurance is to spread the risk of the few amongst the many, right? So,
Yeah.
the more that you can do that and expand, the more stable and regular, you can kind of assess the risk. So,
Yeah.
what's happening in the market now, especially in Florida and some of the areas like, where you have flooding and windstorm,
Hmm.
California has all these wildfires, you're
Oh,
seeing
yeah.
huge increases. We had condo policies. I went through Hurricane Andrew, which is,
Mm.
1992. We saw policies that were $80,000 that went to $80,000 within a year.
Mm.
So there's this imbalance in terms of premiums. So there is a federal mandated program for flood. You're probably familiar, it's the National Flood Insurance Program,
Mm.
NFIP. It's a federally mandated program, and it works, but there are some hiccups with it in terms of the enforcement and whatnot. But
Hmm.
goal is what we need, I feel, is to have a federally chartered windstorm pool to cover policies, hurricanes and tornadoes and such, and of course,
Yeah.
wildfires in California. So you're
Yeah.
getting specialized, specific coverages that there's an inordinate premium for these
Hmm.
individuals, and it's really getting the principle of spreading the risk of these few
Yeah.
on the many. And I always say, it might not play well in Peoria, but we all have to work together, not to be too kumbaya, but everybody's got to kind of hold their weight, because
Hmm.
eventually we're going to be subject to some kind of natural disaster.
Yeah.
I was looking at statistics in 2025. I think it was over $300 billion in natural disaster coverage just in the
Mm.
United States alone. So it
Yeah.
is a major problem.
Hmm. Yeah, I have to agree with that. And I've seen it. I've been boots on the ground and witnessed it and seen the devastation. And I'm curious about I know you mentioned spreading the risk among the many, but go a little bit
Mhm.
further into specifically how premium finance plays a role in this drama, so to speak.
Yeah, no, good question. I mean, many of the companies offer payment plans, which are
Hmm.
kind of a little bit egregious on the customer. They have heavy down payments. And the nature of these policies, they are high risk. And in Florida, for example, hurricane season goes from June to December. So these policies have covenants where they're fully earned premiums. And if you think about it, it makes sense, because you don't want a policyholder to get coverage just for hurricane season. So they
Yeah.
come with, heavy, fully earned premiums or provisions where, they're 80% earned in hurricane season.
Hmm.
But premium finance provides an outlet for these customers to pay over time. And,
Hmm.
like I mentioned before, an $80,000 premium going to 800,000. We had a condo association, you
Yeah.
reserve for this. and all of a sudden they're hit with a 1,000% increase and they can't pay it. So what we do is we fund the insurance policy in full for the customer, and then we use that policy as collateral. So in the event that they don't make the payment, we go to the customer or we go to the insurance company and we cancel that policy. That provides the collateral in the loan, but also gives the insured the ability to finance it over payment. So it's a very affordable alternative. Years ago, there was no alternative, going back to the old days, as I mentioned before. So it plays an important role in that. And I will say there are a lot of finance companies out there. Many of them shy away from these federally chartered programs because of the things that I mentioned, the fully earned premiums. And again, that policy provides the collateral, so you have to make sure that you stay ahead of the game. In other words, if that policy is a year, you want to get enough down to cover the time that the policy is in force so that you can cancel and have collateral. So you're always above water, so to speak. And federally chartered programs have kind of minimum premiums that kind of will, dissuade certain finance companies for financing it. So Standard does some very heavy study in terms of the solvency of the payment of these policies. And we find a very low instance of cancellation. So it gives us about ability to provide that service while other finance companies may not do so.
Yeah. I want to circle back to the company for a moment. I know that, and you can correct me on this, I don't know exactly, if I want to make sure I get this right. You're one of the only, if not the only company of your type that's publicly traded. Am I off on that?
No, you're correct. There's another company that's bank owned, and there's several other finance companies that are bank owned. And as I think, we mentioned in another interview, it's a very fragmented industry.
Yeah.
There's probably half a dozen finance companies that make up about 50% of the total market. And then there's anywhere from 3,000 or so finance companies similar to Standard, smaller ones that make up the difference. So the intent of going public, and as you mentioned, we are the only exclusive premium finance company that is public, was to roll up, to take these businesses that otherwise would not have an exit strategy and afford them an exit strategy while also giving them, the ability on the economies of scale to benefit in a bigger picture. So we had a lot of shareholders that were also note holders. So to encourage them to convert their notes into stock, it doesn't sell well to be a private company because, in the end, it's very, it's very hard to put a number on a private company.
Of course.
So public, we've got a hard and fast number, and the equity would provide the currency to be able to do this M&A or this roll-up type of strategy. Because there is a prevalent market to do that.
Yeah, I see that. And I was like, I feel like it's pretty forward looking and it'll be interesting. I'm going to continue to watch your progress. And speaking of that, the DealFlow Discovery Conference coming up, I understand that you're going to be speaking one of the days. Is that right? And maybe give us a little bit of a sneak preview.
Yeah. What we're trying to do right now is raise capital. We recently expanded our line. We have a $115 million line of credit with 3 banks. It's a syndicated deal. So what the banks do, they typically leverage like 4-to-1 based on equity. And, we roll up, our retained earnings and sub debt or our private debt. They take that and they'll loan out 4-to-1. So it's very important for us to raise additional capital to expand. We started out in Florida. I was exclusive in Florida for about 10 or 15 years, expanded into Georgia and North Carolina. So now we're in 41 or 42 states, I believe. I think we just got licensed in Dakota. So it's been really exciting, and we've hired additional reps and things like that. So it's a very dynamic time in the business, and there's great opportunity for us, as I mentioned, on the economy of scale with these small companies and exit strategy. There are companies that we can triple our profit by taking over or merging or acquiring a small company. So being a public company affords us the ability to make that using the stock as currency. So we're excited to do that. We've been approached by many companies. So, we've always been very conservative. The company's been profitable for, 35 out of 36 years. So our balance sheet is strong, and we're excited to kind of show our wares and speak to kind of our growth plans. We've expanded. I think we're active in probably 9 or 10 states right now, but We hired an individual just recently that does business all over the country. So we're getting deals from, Seattle and, Houston, all kinds of places. So it's
That's
been a
awesome.
good
That's
time.
great.
Yeah.
So I have to ask, first off, been great having you on the show today. We're in
No, thanks.
2026, January, mid-January. What's next? I mean, what's next for you? What's next for the company?
Well, after DealFlow, we've got a couple shows. There's a show out in Colorado. So, as I mentioned before, we don't deal with the general public. Our clients are independent insurance agents. So it's very important that we get out to these trade shows and different things
Yeah.
like that to get exposure. And we generally solicit to those particular individual insurance agencies and chains and whatnot. So we've never really had the dry powder, so to speak, to go out and get this business. So my reps are kind of used to, this conservative thing, and we're limited to what premiums we can finance. And now, with commercial premiums we finance $2 or $3 million deal the other day. We do a lot of trucking and transport. Some of these carriers for Amazon and whatnot, independent guys, these
Yeah.
premiums are really, really high. So it's very difficult for these guys to do job to job. A lot of guys get paid after they complete the job, and it's one of those things, a chicken egg thing. They need the
Yeah.
insurance to certify to get the job, and they need the money to pay for the insurance. So
Yeah.
premium finance lends itself well to that because we take a small down payment and allow them to pay over 9 or 10 payments, things like that.
Yeah.
So as they get the job and they complete it, they can pay off the premium. And so we're excited to expand. It's a new time for us. We have a very good financial backing, 3 excellent banks that are very gung-ho on this business. Premium finance is generally a very safe business because unlike real estate or whatnot, the collateral doesn't change because you finance a premium. And if you finance a $100,000 premium, as long as you get a proper down payment or deposit up front, you follow the process and you cancel timely, that unearned premium will provide that collateral. So it's a very low risk loan. Our dilution is somewhere less than 1%. So 99% of our principal is covered. So banks look at that. It used to be hard to get bank loans because they said it's crazy. How can you be so solvent? As I mentioned, the insurance premium or the coverage, the policy provides the collateral. So, the insured rating is almost kind of secondary. I don't want to diminish the fact of the solvency of the customer, but it's really the solvency of the insurance carrier. When I started, there was a guarantee fund in Florida, federal, like similar to FDIC, if you will, for insurance companies. And it's made primarily to protect the consumer. But when we finance a policy, we get assigned all our rights in that policy. So we are, in effect, the insurer. We have the rights of the insured. So now all 50 states have a federal guarantee fund that protects the insured in the event of insurer solvency. So that, in effect, protects our collateral. So the banks love it because I went through Hurricane Andrew and we had 7 or 8 insurance carrier insolvencies.
Wow.
But the state guarantee fund stepped in and they make good on that, mainly for claims, right? Because you want to protect the consumer, but they first pay the unearned premiums. So that policy gets canceled, obviously, there's a claim, and we get our money back from the guarantee fund instead of the insolvent carrier. So it's a very safe, solvent loan for banks. And the industry's kind of changed with the tariffs and whatnot. Banks have shifted over to kind of stable platforms like this, and it's afforded us, lower rates and better leverage ratios and things like that. So in turn, we can go out and we can utilize that additional capital to gain more business and market share. So it's exciting. We've never been in a position where we've had more dry powder. I've always had more business than I had money to back it up. Now we've got more money, so we have to worry about unused commitment fees and things like that. So we have, several $100 million line of credit. So now my reps they have to get the mindset, hey, you got to go out and get more business, So we're acquiring just different talent throughout the country and things like that. It's a very consumer or relationship-based business because it is competitive, but our reps have a good rapport with their clients, which are our insurance agents.
Yeah.
So
That's great.
it's exciting. Yeah.
Yeah, that is exciting, William.
Mhm.
How do people follow up? How do they learn more? How do they connect?
Well, what we do, we have a website, standardpremium.com. Everything now, again, I was in it for many years, and then I went
Mhm.
back to the days where loans were handwritten and doc stamps
Not
were
anymore.
stamped. Yeah, no, everything is done online, so it's very easy. We have QR codes on the back of every rep's card, and we'll pass
Yeah.
all the stuff out. So investors can go in through an investor site through a QR code, and it's all on
Hmm.
standardpremiumfinance.com, as well as clients. They can log on, fill out an application. It's simple. They just go online and fill it
Mm.
out, and they'll get a rep will contact them within 24 hours at the latest.
Yeah. That's
So
wonderful.
very easy to access, and we're on all the social media, Instagram, Facebook, and so on. So
Mm.
that's all
Perfect.
on standardpremium.com.
And for everybody listening, just so you know, we'll definitely put some links in the show notes so you can just click on the links and head right on over and check it out. And speaking of the
Great.
audience, if this is your
Mm-hmm.
first time with Mission Matters, don't forget, hit that subscribe or follow button. This is a daily show. You heard me correct. Daily. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And William, looking forward to seeing you at the conference. For everybody
I'm
watching,
looking
remember,
forward to it.
DealFlow Discovery Conference.com. Go grab your tickets and meet us in Atlantic City, New Jersey at the Borgata, right, Bill?
Great. I'm looking forward to meeting you, Adam. Thanks for your time.